teachers, borrowers out there, you don't need to panic, right? There is this instant reaction that I think a lot of us have where we read that juicy, clickbait title that says the Department of Education will be abolished and, you know, all your loan programs are going to go away like overnight.
Welcome to the Teacher Money Show, the podcast dedicated to helping teachers navigate your unique financial challenges and unlock your financial superpowers. I'm your host, Sean Morgan, a full-time teacher. That's right, I teach every day just like you, and personal financial coach and speaker. And I'm here to help every teacher, whether you're a seasoned teacher looking for fresh insights or a new educator navigating your first paycheck, to have a richer wallet, classroom, and life. The contents of this podcast are informational in nature and are not legal or tax advice, and neither I nor my guests are engaged in the provision of legal, tax, or any other advice. You should not act upon this information without first seeking appropriate advice from an accountant, financial planner, lawyer, or other professional. I'm super excited to have Andrew Paulson back on the show. If you don't remember, I had Andrew on way back near the beginning. We were talking about student loans and the different options for repaying your student loans. And I'm having Andrew come back on because there have been some major changes going on in the Department of Education, not just the student loan world. So we need to try and unpack what this looks for us as teachers, if we're trying to use these student loan repayment programs and how to best handle that. So we got Andrew from studentloanadvice.com here to help us out. Andrew, welcome to the show.
Thanks for having me on again, Sean. Good to be here.
Yeah, so let's just dive right on in with the big one. The executive order to shut down as much as possible the Department of Education. What's really happening here? Should borrowers panic, not panic? I'm going to throw a bunch of questions at you. Can you explain what changes are happening versus what's going to stay the same? All that.
Yeah, it's definitely a loaded question, and I think the first thing is that teachers, borrowers out there, you don't need to panic, right? There is this instant reaction that I think a lot of us have where we read that juicy, clickbait title that says the Department of Education will be abolished and, all your loan programs are going to go away like overnight. And so some people have interpreted that as maybe my student loans will all be gone, right? And if they eliminate the Department of Education, there goes my student loans, right? But just so you know, even if the Department of Education is dismantled, which is going to take a lot, right? And we'll talk a bit about some of those components today. But first of all, is that if the Department of Education was shuttered, right? There's all these different components of the Department of Education, and some were created by Congress. Okay, so that's not something that can just be done away with by the stroke of a pen or through an executive order like what has happened thus far. A lot of this that the Trump administration is trying to modify, they need some buy-in from Congress, which means there's bipartisan support from Democrats and Republicans for that to go into effect. There's checks and balances, right? And so, as far as things changing and immediately not going to happen, right? But could there be some changes overarching perhaps to the current repayment programs and forgiveness programs? Yes. And I do think the current administration is trying to tighten up the belt on this. And as far as kind of delving into, kind of the key areas that folks need to be aware of, and I mean, what does the Department of Education do, right? It has all these divisions within it. And I know I'm speaking to teachers, right? So the K through 12 space way better than I do as someone who just helps borrowers out with the student loan space and what that means. And I know that the speaking point is that they're going to turn education back to the states. But as it pertains to student loans, in the Department of Education, there is a branch called Federal Student Aid. That's studentaid.gov, and that is who oversees the student loan side of everything and the corresponding programs. Right now, what they have said is that the student loan program is going to be moved to the SBA, Small Business Administration. Well, in order for them to move this program, or rather federal agencies, that would require congressional approval to do so. Okay, so that's one of the first things that's going to happen. It doesn't mean they're going to eliminate all of the student loan programs. And frankly, I don't know that they're even going to have the legal support to do that, Sean. So definitely there is a lot that would have to go into effect before that, right? And so that's kind of one thing is there is a chance that it could effectively change hands. Another thing that folks need to be aware of is there was a reduction in force pretty recently where they have laid off half of the employees at the Department of Education. Okay. So while they have not been able to abolish the Department of Education, half of the staff is gone, right? So I wouldn't be surprised if a lot of you out there are waiting and have been waiting quite some time for your applications to be processed, perhaps for the Public Service Loan Forgiveness Program or your income driven plan, or maybe you're trying to get out of the SAVE program. But yeah, that's kind of initially what we're seeing. I think there could be some changes, but it's not something that should make you just take a knee-jerk reaction on your loans and on your financial situation.
Right. Awesome. Just a couple of things I want to throw out there. One, there's no way the government is going to say, you know what, we abolished this. I guess you just happen to not owe us money anymore, right? That's not going to happen. If they're going to, forgive loans, it's going to be a whole big thing. It's not going to be a whoops. We abolished this department and I guess we can't, collect the loans anymore. So don't take that approach. But then I love the other approach, the don't panic approach. Like it's there, it's going to be there. He's not abolishing the agency that actually oversees the loan programs. Those are going to be very safely guarded, whether it is where it currently is or with the SBA. Like those are not the things that are under attack. So the loan payment programs are still there. But really the largest ramification is you might have, twice the wait time or whatever it's going to be when you're trying to get things handled through this department because of that huge reduction in force.
Yeah, and another thing too is, as what one part of the student loan program is they outsource the day-to-day servicing to loan servicers, these companies called Mohila, Advantage, Nelnet, Ed Financial. And as your loans kind of cycle through different lenders, right? Rather servicers that where you're making your payments, sometimes records can be lost. And so I think it's a good idea for everybody that has student loans, if you're trying to do forgiveness programs, just download your records. Go on to studentaid.gov, download your federal file, take a screenshot of your payment counts and things like that, because I have seen when they move systems and programs in different organizations, sometimes the data doesn't carry over and it's not clear and it's not clean. And so I think it's always a good idea to have good documentation as well.
I love that. So speaking of Mohila, they just announced an income certification delay for people on IBR, ICR, and pay plans. Now, I sound really smart just now, but I'm taking this directly from an email I got from Andrew who's telling me all these things that happen. So for those who, like me, who might not know what all that means, can you talk about what Mohila is and what these different programs are, and then move into the implications of this income certification delay?
Sure. So when Mohila is simply an organization that is contracted with the federal government to service your loans, right? So all of you that have federal student loans, which is most of us here, right? You have taken out loans for your schooling from the federal government. You filled out the FAFSA initially, all those years ago, right? And so you owe money to the federal government, right? They have directly lent money to us. There's $1.7 trillion now of student loans. Okay. And they outsource the day to day. So where you're making your payments and, where you're switching your payment programs and keeping track of your records, that's all done by your student loan servicer. And that is Mohila in this case. Mohila doesn't own your loans. They're just servicing them. Okay. So, what about these repayment plans that you're talking about? They are called income driven repayment plans. That's IDR. ID is in dog. Okay. Because IDR and IBR are sometimes commonly construed as the same thing. But with income driven repayment, there are four different payment programs. Because when you're looking at, what are your options in terms of how do you pay your student loans down, there are time based options where it's over a 10-year period of time or a 25-year period of time, or typical ones. And there's also income driven repayment programs. And income driven repayment programs mean that your monthly payment is based on your income. So say you're making $5,000 a month, your payments are about 10% of that. So they'd be about $500 a month is an estimated, output as far as your monthly payment. And there's four payment programs: pay as you earn, saving on a valuable education save, income contingent repayment, and income based repayment. And in order for you to stay in good standing with your loan servicer, you need to do this certification once per year. I kind of think about it like taxes, right? You got to file your taxes each year, or else the IRS is going to come after you, right? And in a similar fashion with student loan programs, if you're on an income driven repayment program, such as IBR, once per year, you're going to need to certify your income. But what has happened recently was one of the payment programs, Save, that we'll probably get into a little bit later today. There's been some legal stuff going on with that program, and it's likely not to stick around. And so the Department of Education realized, with all of this kind of up in arms and changes, we're just going to push off income verification a whole nother year. So for those of you that were due to certify income, provide a tax return or some type of income documentation just to do your typical certification, that's going to be pushed off a whole nother year.
Okay, so uh, first, I just want to clarify for anyone who's listening, the Department of Education being downsized has nothing to do with MOHELA having this certification delay. They are just two things that are happening around the same time, correct?
Yes.
All right, awesome. So we're having this also happen because of the SAVE program, which we're going to talk about more. And the real benefit then is that if you are having your income go up, you're not reporting that for another year because they're delaying that for another year, right? So
Correct.
the amount you're going to pay is still going to be based on your older salary, even if your salary has increased.
Yep.
Yep. All right. Awesome. Um, but that's not for everyone. So if we're on the SAVE program, because that wasn't one of the ones that we were just talking about, what does that look like? Why is SAVE being left out in the cold? And what's going on with SAVE right now?
Yeah. So I think it's a good idea to take a back step as far as how did the federal government create these different payment programs, because it generally comes to when we're talking about loan policy, whether it is forgiveness programs or repayment programs, the government usually has two levers that they utilize to create loan policy. One is through Congress, through bills, and the other is through a process, but through the executive branch. Okay, typically through a process that is called negotiated rulemaking. Well, it just so happens that the income based repayment program, IBR, was the only plan that was created by Congress. That was created back in 2007 under the Bush administration. There are three other income driven plans: ICR, Pay, and Save. Those three plans were not created by Congress. They were created through the process called negotiated rulemaking. Most recently, the SAVE program was created under the Biden administration back in 2023. And why was it done through negotiated rulemaking and not created by Congress? Well, it's because they realized they weren't going to have enough bipartisan support to create it, right? That is why they ran things up the through their sitting education secretary, and through there, when they when Democrats had the executive branch majority, let's so to speak. And that's how they created the SAVE program. Well, about a year into its life, there was a lawsuit, and this was multiple states sued the implementation of the SAVE program, and they're just basically alleging that a move this significant, that would be billions, maybe, if maybe even into the trillions of dollars of cost for taxpayers and people in the United States, that's likely reserved for Congress to rule on, rather than the previous administration to roll that out. So that's kind of what had happened. And so as of July or August last year, everyone on Save was placed into a forbearance. And this forbearance is good and bad. It's good in that it's similar to during COVID when they had frozen payments and frozen interest and collections. You don't have to make any payments on your loans. And there's no interest that is currently accruing. Typically for student loans, they accrue interest every single day, right? So that's the positive side of this forbearance where they have kicked the can down the road for payments. And here we are 8 or 9 months into this already now as of recording here in early 2025. So and what's the downside to this whole forbearance is that you're not accumulating any credit. So say you're doing a loan forgiveness program, you're trying to do public service loan forgiveness. A lot of teachers I work with are doing that, right? And you're on the 10-year track or you're on the 20-year forgiveness track under the IDR forgiveness plan. Well, you're not currently accumulating any credit. So now it is a good time if you're on the SAVE program to look at some other payment plan option because in a matter of days, weeks, or months, this SAVE plan is going to be eliminated. And you really need to be looking at some other payment program.
Now, I like how you pointed out how like you might be like, oh, this is great. I'm not paying anything. And it might be great if you are not on the loan forgiveness track, right? You're just right now you're not paying into it. It's not going up. Maybe you could be building up a nest egg and earning interest on that. Like there's smart ways to handle that, right? If you're on there. But if you're planning on getting the loan forgiveness and you're not accumulating that, you're going to be in debt longer. So there's definitely, that back and forth depending on which direction you're going. Like, but I can see how it can be really beneficial to have that forbearance without the interest if you use it correctly. If you're just gonna be like, hey, I don't have to pay this, I'm gonna go buy a boat, maybe not be the best thing to do with that break. But there are, upsides and downsides depending on the track that you're on with this. So you're saying, are you saying that you assume save is going to be defeated or like and taken down, or is it pretty like the writing's on the wall? Save is going down. You need to find another place to go to if you want to start accumulating that credit again.
Yeah, good question. It's not officially official, but it's basically there. There is, if you go on to the application to switch payment programs, the save plan is entirely scrubbed off the application. There all signs lead towards this plan going away. And on the one hand, you have the court case that does not look good for the SAVE program. And it's been in the court since July of last year. There's a bill as well. And this is actually, it's called the One Big Beautiful Bill that Republicans are looking to pass. I think mainly it's for the tax cuts that they're trying to do. But in there is, and it's a reconciliation bill. And this is something that doesn't require, it's a filibuster proof bill where they only need a simple majority in the Senate. They just need 51 votes rather than 60 votes, which is, how bills that have, sometimes when there's opposition, then you need 2/3 majority in the Senate to pass a bill. But in this case, there's a reconciliation bill as well. And there's a clause in this bill that eliminates the SAVE program as well. So we got these two things that are circulating out there, and whichever drops first is going to eliminate the SAVE program. So, I mean, I can't tell you that it is eliminated today, Sean, but it could be tomorrow, right? Or it could be in a month or two. And I think everyone out there that is in SAVE needs to look at what their alternative repayment program is, whether it's getting onto IBR or pay or income contingent repayment, or it is, potentially looking to just start paying these down. Maybe you refinance the loan, right? But I think for a lot of folks, you need to be prepared to get kicked out of this SAVE plan very shortly, probably by this summer.
Now, I just have to ask, is it literally called One Big Beautiful Bill?
I don't know what the official name is, but I think that's what's I think that's what's circulating right now. Maybe it'll be
Okay,
the
so it's like
the the
the
Republican.
Obamacare nickname or something like that for this bill.
Yeah,
Okay.
yeah. It's just I think right now it's just referred to as the one big beautiful bill, which is just a wish list, a bunch of things that they want to throw in there, and get rolled out here not too far from now. So
Well, let me add politicians to my list of people who are terrible at naming things. But okay. So moving past that, so we've talked about save. Uh, there's another big thing. So we're just trying to hit all the main highlights here of things that are happening. There's also this stop work order halting IDR processing. So we've talked about IDR. It's this income driven repayment. Uh, what does this mean for there to be this stop work order? And if you're applying for PSLF or other types of forgiveness plans, does that impact that?
yeah, it's you can see kind of where this is going. Student loans are kind of it's a big cluster right now of jumbled mess, I'd say, and has kept my life busy. But so this stop work order was there was more kind of guidance from this court that is reviewing, the SAVE program, and they're like, hey, maybe we should, while the SAVE plan is tied up, let's actually stop accepting any applications to get out of the SAVE program. And that was part of this stop work order, where if you wanted to get into another payment program, say you wanted to get into the IBR plan, you're like, all right, I want to continue my progress for public service loan forgiveness. I'm going to apply for another payment program to get my clock rolling again. Okay. So what happened was the stop work order dropped. And so they basically, studentaid.gov, the applications to switch payment programs was taken down online, and they have actually told all loan servicers to stop processing applications. So if you're in the save plan, you couldn't even get out of it anyways, even if you wanted to, right? Well, a little while later, there was actually the American Federation of Teachers filed a lawsuit. And they're like, hey, that's not okay. You need to allow people to switch payment programs again. And they made some progress. Okay. And that was really middle of March. And now you can apply for another payment program like Pay, IBR, ICR. They have not yet given servicers the green light to actually process them, but at least you can put your flag in the sand, and you can apply to get into another payment program.
Okay, so right now we're talking about if you're in the SAVE program, you're making a plan, maybe even making an application. You're probably not going to be able to get out yet, but you're directing yourself to where you need to go. But we're still got this little bit of a sticking situation with this stop work order. So that's really good to know. So that means that if you are in SAVE, you're not accumulating that credit towards PSLF. Uh, but this has nothing to do with, like, say I'm in a different program and I'm accumulating those credits and I'm like ready. I could still apply and get that forgiveness, right? There's nothing against that right now. It's just the switching between programs.
Yeah, yeah. So you're not able to switch right now. But and I do also want to say as well, Sean, if you're someone who's been in the IBR plan or the pay program or the ICR plan, you've continued to accumulate credit, since this whole lawsuit happened with the SAVE program. So we're just talking about borrowers that have been in the SAVE plan, which is a lot of people. It's 8 million people out there, right? So it's, out of the 45 million student loan borrowers, what is that, about 20-ish%, 25%, right, of everybody. So probably a lot of people listening today, right, are in the SAVE plan, but it's really important for you to look at what an alternative to the SAVE program, and it's probably not going to last a whole lot longer that you're no payments and no interest on your loans.
And I'm assuming that if the SAVE plan goes away and you haven't made a choice where you want to go, they're going to have somewhere they're going to put you, and it might not be where you want to be.
Yeah, so the default payment program is called standard. So it's usually about 1% of what your student loan balance is. So if you got $100,000 in student loans, you could have $1,000 monthly payment, starting up. And pretty shortly after that, they will give folks some time to apply for another payment program. So, and it'll say, hey, you got 4 months to switch payment programs. So you want to go in beforehand and calculate what are my best options rather than be beholden to them just moving you into some random program.
Yeah, absolutely. All right. So I feel like we've really, just dialed into these, maybe debunked some myths. Is there anything else that you think teachers need to know about these changes that have happened? Or on top of that, what's the next step that a teacher maybe should take to get ahead of any of these changes?
Yeah, I mean, I think another big worry of people is, hey, I'm doing this forgiveness program and I'm 8 years into public service loan forgiveness, or I'm 18 years into the 20-year track. Are they going to rug pull me, before I get there? And I still do feel very strongly that anybody that is doing one of those forgiveness programs will still get there, assuming they meet the criteria. The 10 years working in public service, or the 20 years of making payments on income-driven plans for those not working at nonprofits. So that's one big thing. And I know a big area of concern for people is that am I no am I going to be left in financial ruin because I had made a lot of decisions based on my loans, being forgiven, right? And so I still think forgiveness is a good track for a lot of people out there. It can make a lot of sense and save you a lot of money, but just have a little backup plan in place. Maybe, you set aside some money that you would have been putting into your student loans had you refinanced them, had you decided to not go down the forgiveness route. And you can set aside a little, I like to call it a side fund, that this kind of works like an insurance policy. So even in the event, if forgiveness is eliminated, when you're in the last month before you get to forgiveness, it's not going to really set you back a whole lot on your financial goals. So I think that is a good thing to do, as well as be prepared for payments likely to increase. I think a lot of people haven't had to certify their income, send in their tax return for their IDR plans for years and years and years. I have some clients, they haven't certified since 2018, 2019. It's been 6, 7 years. A lot of them, their income's doubled or it's tripled or it's gone up significantly, or they've gotten married and now they're dual income, right? And so just make sure that you have already budgeted for what the increase in your payments will be, right? So take that into account. And what else? What else for our teachers? I know we've talked a lot about kind of the forgiveness programs, and I know that that's a big thing, but there's also a lot of you out there that are not qualifying for these forgiveness programs, and interest rates have actually gotten a little bit better lately. So I've had a fair amount of clients that I've worked with, mainly those that have gone to graduate school, that have interest rates anywhere from 6 to 8%. And, I'm seeing some clients get somewhere in the 4 to 5% to refinance. And that is where you can take your loans from the federal government and move them out of the federal government to a private lender, and they'll allow you to get a lower interest rate. The government doesn't refinance your interest rates. They stay fixed over the life of the loan. So that's another thing, you should definitely be looking into if you're not a forgiveness candidate and you're looking to just pay them off.
Yeah, I love it. Great pieces of advice there. I just going back to this idea of like forgiveness programs being pulled out from under you. I would be very surprised. I'd be shocked if any politician had the guts to just yank that program out, wholesale without any grandfathering in at all, because that would just like wreck anyone's ability to get reelected. That'd be pretty hardcore thing to do. So even if they pull out forgiveness programs, it'll likely be, we're not accepting any more people into the loan forgiveness program, instead of, oh, you're 1 month away, too bad, right? That's just how they usually operate to try and lessen the blow of a transition like that. So I would be very, optimistic that I would have the forgiveness program if I'm already in it. But there's never any bad reason to have that side fund that you were talking about, right? Having that money on the side, say you're investing it, watching it grow, and then you suddenly need it. Well, that's what it is there for. Oh, you have your loans forgiven? You still got that money for anything else you want to use it for. So it's always a good idea to have that side fund just growing and compounding over the course of time is just keeping your eye on that and knowing that it's there for the loans and just in case. But then once you're forgiven, use that for whatever your other next big goal is. All right, Andrew, we're coming down to the end here. Just got two more questions for you. My first question is, what is your number one tip for teachers to have a richer wallet, classroom, and life?
Invest early and often. I I was sitting down with a couple just the other day, and they they were trying to make a decision on their loans, and it was going to save them like $200,000. It was a big amount of money over like a 10-year period for them to pursue a forgiveness avenue. But then we also looked at, well, what if that $200,000 you put that in your IRA or your 403b or some type of investment or retirement account, and you invested it for 30 years and at a decent interest rate. It was like $1.5 million, right? In terms of what this could go to. So really, if you haven't already, it's just learn about that, right? It is not as hard as your day job is as teachers, right? Learn a little bit there and then just start saving little bits and pieces. And sure, I mean, the markets have been a little bit turbulent lately, right? But don't look at the the short term. Think about this more long term.
Yeah, I love it. Great pieces of advice. And speaking of advice, where can people get a hold of you if they're listening to this? They're like, man, I am wanting to make a good plan to get out of save. What is the best choice for me? Or they just want to figure out the right path towards forgiveness or not forgiveness. So they just want to understand their student loans and how they can proceed in the most optimal way.
Yeah, so I run a company. It's called studentloanadvice.com. Named it that way because we help folks out with student loans. We've helped about 3,000 borrowers now navigate forgiveness and how to file taxes and repayment programs and what to do with all of the SAVE program. So you can find us at studentloanadvice.com/TMS. And we would be happy to help anybody out there that is feeling a little bit overwhelmed with their loans, and maybe you already have a plan and you just want somebody to poke some holes in it and make sure that it is well oiled, or you just need a second opinion. Would be happy to help you navigate this.
Awesome. Well, so Andrew was nice enough to say his website with our partnership link, studentloanadvice.com/TMS. That's for Teacher Money Show. I'm partnered with Andrew because I believe in what he's doing. I believe that he is going to give you good advice, right? He's not one of these financial advisors who's going to sell you a product. He is simply going to hear your situation and say, this is how you should think about it. This is a way to approach it. Here are the numbers, and help you make the decision on what's best for you. It's not like a financial advisor who's selling a product. He's just giving you the advice that you need to make the right decisions on your student loans. So I highly recommend you go to you can go to teachermoneyshow.com/podcast, and I'll link directly to studentloanadvice.com/TMS. There, you can also find it in the description of your podcast player. I'll have that direct link to the show notes so you can find Andrew and get connected with him. Andrew, this was a ton of fun. Thank you so much for coming on the show.
Thanks, Sean.
Wow, that was a fantastic conversation. Thank you, Andrew, so much for coming on the show. This show is brought to you by studentloanadvice.com. So I told you in the show that I have an affiliate relationship with Andrew, but it's because I believe in what he's doing. So if you go to studentloanadvice.com/TMS, you'll be able to connect with him. Also, I just want to take a moment to remind you that I am going into schools, speaking to teachers about financial decision-making and making the right financial decisions, so that way you can become wealthy on a teacher salary. If you want me to come to your school, please talk to your principal, talk to your administration at the district level, and see if they are willing to bring me in to help you and your fellow educators live a richer life. Okay, now on to the cliff notes. The first cliff note is these changes are not going to really make a huge difference without congressional approval. He can't really do a lot with just executive order. It has to have a congressional approval to really make the large changes that Trump is wanting to make. So until that happens, cool your jets, right? There's nothing drastically going to change other than number two, that things might move a little slower because there is less staff on hand at the Department of Education. Until it gets shifted over to the SBA, which might not even increase the speed that much, or they figure out something else they're going to do with that agency, or maybe another administration comes in and bolsters it back up. Whatever it is going to be, we might be moving a little slower because of that shorter amount of staff. But just be patient. Things are still moving forward, and we just need to keep calm, take a deep breath, and realize that it might seem like a huge change, but most everything has stayed the same. Number three, I love this one. Download your federal records just in case. As things are shifting, that's when things get lost digitally. So you want to make sure that you have a hard physical evidence, and you can put it in a drive, whatever, just something that's like in your control that says this is what I have accomplished. And I would just go a step further and recommend that you do that probably yearly, just to make sure you're refreshing that and keeping that on hand so you don't lose any of your progress. Number four, the SAVE plan is in forbearance, which is great in some ways, but not so great in others. If you are planning on paying off your loans, it's great because you're not accruing any interest. So maybe you can save up some money, get some interest on top of that, and then slam it once it's finally closing up. Or if you are in a forgiveness program, you're not accruing those credits, so it might not be the best option. So it just depends on the track you're on, whether or not SAVE is a good place to be right now. But either way, you need to be choosing where you want to go next, because it's probably not going to be there much longer. Number five, PSLF is likely not going away. Even with all these changes, it's very unlikely they're going to pull the rug out from under you. And even if they do, it's unlikely that they'll pull the rug out from under those who are already very far advanced into the program, let alone anybody. I would be shocked if anyone got it pulled out from under them once they are already in. But be that as it may, having a side fund, something on hand that you can use to crush that debt if you need to, if you got pulled out from under you, or if you get that forgiveness used for whatever else you want, that is the way to handle that. Number six, interest rates have improved a little bit. So if you're not doing forgiveness and you want to refinance, now might be a time to look into that to see if you can get a lower rate. And then finally, number seven, invest early and often. I love how he's coming here talking about student loans, and his advice isn't about student loans. It's about investing. Start growing your personal wealth early and often. Even if you have student loan debt, getting that compound interest working in your favor with that and those investments is key. Okay, that's the Cliff Notes for today. Thank you so much for listening. Once again, you can connect with Andrew or get any of the notes for this show in the show notes at teachermoneyshow.com/podcast. And you'll be able to find the show notes to this show or any of the shows there. Or if you go to the description of your podcast player, you'll find a direct link to the show notes for this show. Now, if you're in student loan debt and you're on a forgiveness track, or you're trying to pay it off, or you're just unsure what to do and you need some advice, regardless of where you are in your student loan journey, remember that as a teacher, you are already rich. Your wallet just needs to catch up. Are you worried you won't have enough money to retire? Or maybe you just don't know how you're going to get out of all of this debt. Whatever your situation is, I can help you. Go to teachermoneyshow.com/guest and fill out the form there, and you can come on the show for free coaching, or we can meet one-on-one to discuss your needs. I look forward to talking to you.